so my voice doesn't give out. All right, government-wide financial statements. And so what we're going to cover here is not only government-wide financial statements, but we are, I got a nice sign. Y'all are so sweet. To my friends online, I am so sorry you saw the back of my head. The people here are trying to do their best to get me to behave, but I don't always behave. So now I have a wonderful sign that says, look at those wonderful folks in the camera so they can see the front of your head. So I'm sorry that I haven't been doing that. Please forgive me. But it's great information, isn't it? It's just so cool. Okay, turn the thing on, honey. All right. So, part 3 in our intermediate governmental accounting course, you knew this, we're going to go through our financial statements. Again, if you are like me, when the government-wide financial statements came out, you didn't like them. And then when Statement 68 came out and we had to record our unfunded, our portion of the unfunded liability of the pension that we have nothing to do with on our balance sheets, on our statements of net position, and then the net position went negative and will be negative till the dying day, then they made even less sense. And I did not like these statements. I still don't so much like these statements because of the GASB standards. However, what did I tell you? Grant me the serenity to accept the things I cannot change. Deal with it, okay? Deal with it. So the best thing now is to understand, to really get to know your own and to understand your own. Now you know you have arrived when you understand your own financial statements so well, especially your government-wide, that you can explain them to somebody else like your governing body. Okay, so we're going to do that. We're going to do that. So we're going to go through the government-wide, and then we're also going to go through our audit reports, because a lot of people will take an audit report and they will look at the back and say, what are my findings? And they're done. Okay, but there's so much gold in an audit report. There's so much good stuff. There's a lot of information in there that makes us really astute financial managers, and we can help really make a difference. When I got to be a really good financial manager, I wasn't so much working on my income statement because that was the here and now. I had got my budget, you know, how's my income statement performing according to my budget? Not a lot of surprises there. I was really managing my balance sheet. That's when you know it's a whole lot harder to do, but it's great stuff. All right, to summarize where we are so far, we have our governmental proprietary fiduciary fund types. We have our measurement focus. Governmental funds is different from the others. They're current. That means that they leave off long-term assets, long-term liabilities. The basis of accounting is accrual with some modifications for that, called modified accrual. And then we have our financial statements for our 3 types, which are all very different. Okay, so Diane, what does that mean for government-wide? Well, let's take a look at our government-wide. Okay, so when we take those governmental funds and we have to convert them to the economic resources measurement focus, what are we doing? So here's what happens here for government-wide. They've got, that's the whole purpose. You have to bring in those long-term liabilities. You have to bring in those long-term, those capital assets, even when they're in your governmental fund. Bring them in for that. So the 2 kinds of financial statements, we don't do a statement of cash flows. We have a statement of net position, but that's cool. We got that. We've looked at statements of net position, right? We got that. Not hard. And then we have a statement of activities. So it's not statement of revenues, expenses, and changes in net position. It's not additions and deductions. It is called a statement of activities. It is weird. It is very weird. In preparing for this, I'm like, this is the weirdest statement. But because we go across and then we go down. Used to be we started with revenues at the top minus expenses, and we get our subtotal, and when we do in our plus minus other financing sources uses, my special and extraordinary, we get our change in fund balance. We're good. Straight down. Makes sense. Not here. We're going to go across and then we're going to go down. Okay, so it's a little bit different for that. But don't worry. We got this. Okay, we got this. We're going to look at some really great examples, and we're actually going to read them and understand them. And we're going to learn why GASB has us do it that way. And so in government-wide, here we go. What kind of funds? We're leaving out some of our babies, right? We're leaving out our fiduciary funds. But haven't I been telling you all morning? That's because that's OPM. That's other people's money. That's not our money. So when it comes to government-wide, for your government, for your statement of position, the fiduciary is somebody else's money. We don't need that. It's going to muddy the waters. We just need our stuff. So it's only our government-wide and our proprietary, our governmental funds and our proprietary funds. And then we have a new concept called component units. These are, we're going to talk about more of what component units are. So for right now, think about, we're only going to put in our non-fiduciary component units. So there are component units that can be fiduciary, like maybe some of those retirement systems, depending, all right, and our other post-employment benefits, okay? So if we have, because it could be a fiduciary fund or it could be a fiduciary component unit. Depends on GASB 14, as amended by 61 or 62, okay? So that then what we're going to do is we're going to leave those guys out too. So nothing fiduciary, just everything that's under the government's control. So let's talk about component units. So GASB 14 says that, so here's what you have to have. You have to have what is your reporting entity, and you have to define your reporting entity. So your reporting entity, what funds, what kinds of organizations. So it's ones that, for the component units, that are going to be included with the primary government. So if you're a town, you're probably good to go. You may not have component units. If you're a parish, you probably have component units. If you're a big city, you have component units. You probably do, okay? Our larger governments will tend to have these. There are some school boards with component units because there's no limit to the human imagination on how they can write up a cooperative endeavor agreement, okay? And depending on these kinds of things, financially accountable. So how do you determine financially accountable? The first definition of a component unit is the primary government is financially accountable, okay? So let's take a look. It has to be, the first one is and. So A, within this legal entity. B, it might be legally separate. And the primary government appoints a majority of the board. Let's go back to those two. Or the first one, the A, B, or C are ors. Okay? So you're either within the primary government's legal entity, or if you're legally separate, then the primary government appoints a majority of the board. And then C is it's fiscally dependent. The component unit is fiscally dependent on the primary government. And I don't mean that the primary government may supply them a place to operate out of, an office or something like that, a building. That's not necessarily fiscally dependent. Okay, so then let's take a look at B, that board component. What's going on with that? Is the primary government able to impose its will on the organization? How do we do that? By appointing a majority of the board members. Okay, then we can do that. Or if a specific benefit or burden exists, which is where the primary government has to pay the component unit some money. Okay, so this is at a high concept level. The other one is it's misleading or incomplete to exclude the beauty's in the eye of the beholder. What will often happen for you, those of you who have lived long enough to change auditors, you get a new auditing firm, they whip out the GASB 14 flowchart and they're working through this, and you get a new set of eyes on this. And then they start asking you for organizing documents and those CEAs and those kinds of things and the laws and what they specifically say. And every once in a while you're like, dude, I don't think that's a component unit. I just don't think that's a component unit. And I got to go through that when I was at Orleans Parish School Board, because Orleans Parish School Board applied for, did all of the accounting for federal grants, was the LEA, my school board friends know what that means, for a couple of charter schools. And what that means is for federal grant purposes, the money came to the Orleans School Board, and all they did was send the money to the charter school. And they said, charter school, send me all your expenses so that I can report back out. That's all it did. They had been listed, separate governing body, separate everything. So they had been listed as component units for many, many years. Now look, I'm not the brightest bulb on the tree, but I look at this and I'm like, dude, we don't adopt their budget. We don't have a thing to do. The Orleans Parish School Board has nothing to do with them. All we do is get this federal money and it flows through. And should we not flow it through, Diane goes to jail. Don't forget, that's my goal in life. Don't go to jail, right? So is that really a component unit? I would tell you, I don't think it is. So we went through that. We looked at, pull out the charter, pull out the agreement to do this, and we determined, no, it's not a component unit based on that. So there are going to be component units. Now, this slide brings it all home, because we could talk all fancy and talk all concepts, but at the end of the day, you know you're a component unit when, and here you go. So libraries can be component units of cities, and then we talked about parishes and police juries that have them, right? So then you see some common things. A library can be a CU of a city or a parish. Depends. Depends. In our larger cities, maybe they're that. So you see a lot of things that are the same. Airports, the city marshal, any kind of economic development, housing development, financing authorities, those things are the component units, right? So you'll see these things in the, I'm going to show you how to read the audit report to know what these are. Transit authority. So you see how this is very strong related to what the parish and the city does and for them and all of those special districts. So let's take one other thing before we look at an example is component units get to be presented one of two ways. They're either blended, my favorite, or they're discretely presented, not my favorite. So why is blended my favorite? What's Diane's rule? Keep it simple. So a blended component unit usually ends up being a fund in your primary government. That's what it is. It's just a fund. That means it's blended in. Okay, so at Orleans School Board where I work, we had a blended component unit because they handled the historic tax credits that Orleans did. Okay, it was blended. It was just a fund. Nonprofit, it was a fund that went through. Discretely presented is when they have their own financial statements. And so what you have to do, and a lot of you, like I feel your pain when you're in your big cities and your parishes with these guys, because these guys need to get their audit done so you can get their number so you can include it in your audit report. And that is yet one more thing that's very, very unique about governments that we don't have in the for-profit world, is that. Okay, so a discretely presented component unit functions as its own. It issues its separate financial statements, but also has to be included. And they may have component units of their own. So component units are component units. This is when your head spins. This is when you take out a blank sheet of paper and you draw it all out and see who the mamas are and who the babies are, so that you can identify your reporting entity for your audit report. And so the blended component unit, they really function, like I say, they're a little separate fund on the financial statement, and that's really all they are. That's why they're my favorite. Why? Because I have control over them and I can get their accounting right, and then I don't have to wait on somebody else to have the numbers to put in my financial statements. So how do you know? Inquiring minds want to know, Diane, how do I know if it's blended or discretely? How do I know who the component units are? Your first introduction to the wonderful notes to the financial statements. Used to be, I'm so old, that it used to be note 1 was your longest note disclosure. However, when you live long enough, your notes for your pension and your OPEB are even longer than note 1. But note 1 or note 2 for some is your statement, your summary of significant accounting policies, SSAP. So things like choices that we get. Remember we talked about that purchases method or that consumption method, right, for prepaid. That's going to be in note 1. Your capital asset stuff, we're going to take a look at that. Your asset lives, decisions that you get to make, choices that you get to make. You're going to talk about the significant ones in Note 1. So it's a very, very good note for those brand new to your government. So I used to work at a sheriff's office. I'm now going to work at a parish. Read Note 1. Read Note 1. It tells you so much about the accounting, the organization, and everything. So that's where we are. So GASB 14 says not only do you have to say your component units, but you have, of those criteria, you have to say why. So let's look at our friends in Jefferson Parish. This is their note on blended component units. So in paragraph 1, it says these are legally separate entities from the parish. They're governed by the same elected council that governs the parish, and the parish has operational responsibilities. For financial reporting purposes, these are reported as if they were part of the parish's operations. And here you go, a lot of special districts. A lot of special districts that we see here. Fire district, hospital district, drainage, garbage, sewer, waterworks districts, okay? So in Note 1, these are blended. So what will you expect to see here? These are funds. These are separate funds that we're going to see in their financial statement, but they're telling you they're component units, but they're blended. My favorite kind. Then they have another one, their employees' retirement system. This is also a blended component unit, but it gets its own paragraph because it's a different reason that it's a blended component unit. Okay, how cool is this? I mean, this is just the coolest thing, I swear. Okay, so look here. They are governed by board of trustees. Only one of the trustees is appointed by the parish council, so we don't have the same reason as in one. The other 6 are employees of the parish. For financial reporting purposes, the employees' retirement system is reported as if it were a parish operation because its purpose is to finance and provide retirement systems for the people. So in Note 1, it's so rich in information. It describes your blended component units, lists them out, and tells you why. Way cool. Okay, let's look at discretely presented component units because Jefferson Parish has both. So they name, and they had a few more, but I just cut it off. So here we go with discretely presented. These are the guys that are legally separate. They have their own governing councils and all that stuff, part of the parish. So why are they part of the parish? What do they do? So they have 2 of these. They are, let's see, these are reported in separate columns and emphasize that they're legally separate. So they have one called JEDCO, and this is an economic development district. Tells you what it does, who the boards are, and then their Jefferson facilities. See? So when you go read your parish, when you go read your big city municipalities, you get to go see what they are, blended, discretely presented. And then you're going to have the, and then you're going to see that because what they'll do with discretely presented, look, they don't care. They don't care what kind they are. They don't care anything. They just lump them in one column, okay? And that's what we're going to see. So one more thing before we get to our government-wide financial statements. We absolutely have to know, we talked a little bit about this because we will see this, business-type activities and governmental activities. Now, by now, y'all are so good and you've got this and you know this and you're like, Diane, I know that business-type activities have a for-profit motive, that's full accrual, that's economic resources, and that's recorded in enterprise funds. Diane, I know about governmental activities. They're modified accrual. They are current financial resource. They don't have any of that long-term mess. And there they are, governmental activity. For the most part, that's the rule. There are nuances that, again, are the topic of advanced governmental accounting, but just let's go with that. Okay, so that's basically what they are. See the word usually reported because sometimes not so much. For that. So you're going to see this on your government-wide, but you now have a new appreciation for this. So let's take a look at St. Tammany Parish on their statement of net position. So this is what I call a generic term, is the balance sheet run. Okay, this is assets, deferred inflows, outflows, liabilities, and net position. So here's where we see the primary government. Okay, So then we see our two types of activities, right? Our governmental and our business type of activities. And that's the total for my primary government. Add in whatever my component units are. We don't care. We just throw them all together in one column and list them there to get the total for the reporting entity. So you see that? That's pretty cool. That's pretty cool. So you can separate that out. Now here, and then we've got kind of gone through their assets. Here we don't do current and non-current so much. We just do an order of liquidity for them and see their capital assets, their presentation of their capital assets. They don't list each one separately. Land from improvements from CIP, they just lump it all together for that. They have to list, you're required to list the ones that are not depreciated versus the ones that are depreciated. Diane, why don't we depreciate land? Because usually land appreciates in value. And for conservatism, we don't record it at its fair market value, right? We record it at historical cost. So land is not depreciated. Diane, what about improvements? What are those? What is construction in progress? Those are things that are happening that aren't finished. So improvements to land is like infrastructure and things like that, but I'm not finished building it yet. Construction in progress is I'm building a building, but I'm not finished yet. So all I'm doing is putting my cost of my building in there, and I'm not depreciating it because I'm not finished building it and I'm not using it. Once I put it in use, it goes out of CIP, it goes into buildings, and it starts getting depreciated. So those are not depreciated. And then they have their other capital assets net of depreciation. That's your furniture and equipment and your buildings and your other things that are depreciated. And they net the two together to show one number. There is a note disclosure. We're going to take a look at note disclosures for that. Let's take a look at our deferred outflows of resources. So we're on our government-wide statement of net position. Government-wide are our governmental funds and our proprietary funds, not fiduciary funds. But take a look at our deferred inflows and outflows. What do we have here on our deferred outflows? We have, and these are charges that are going to happen in the future, not now. They're deferred. Newsflash, you can only call deferred on a statement of net position what GASB lets you call deferred. So some of us have what we call unearned revenue. That's on our fund financial statements, okay? And it is not here, and that's that revenue that we got, but it's after that 60 or 90 days. Okay, so we suspend it on our balance sheet before we recognize it on our income statement. That's where it goes. But here, you say your reasons. So they have the three reasons that most of us have. They have their other post-employment benefits and their pensions. They also have bonds. That means they sold their bonds at a premium, okay? And that premium will get amortized over the life of the bonds. So that's what those deferred outflows are, okay? Only what GASB tells you to do. And then here are their liabilities with their deferred inflows. So we recognize, so here are our liabilities. We have our current liabilities, which they don't have the separation. They have their non-current. So their non-current liabilities are due within a year. That's like your bond payments, and then due in more than a year. Okay, you're going to separate that out, that 1 year from your financial statement to see that. So you have, and then you can see that's also basically in order they're going to be liquidated for that. And then look, we also have deferred inflows. Diane, why can't we net the two? It don't work that way. There again, that's an advanced governmental topic that we will not do in CLGE. You're going to have to learn that one on your own, but just trust me on this. You can't net them. So you have both inflows and outflows, same things. But here we added leases. So look at that. They have implemented GASB 87 on leases, and so they actually have some deferred charges related to leases on their financial statements. Let's look at that net position. We're okay with these. We got these, right? We've got the net investment in capital assets. We have just restricted and unrestricted. What don't we have? Capital contributions, because that's not a category at the government-wide level in our statement of net position. All right? Y'all got this? You got this. It's not that hard. The income statement's a little harder. Just take a sip of coffee, you know, try to give your brain, look, it's going to get harder, but that's okay. We're going to work on it together. We've got this. So that's a statement of net position government-wide with our component units broken out. Governmental activities, business type activities, my total primary government, add my component units to get my total. Got it? That's what's going on. All right. Statement of activities. Look, just don't shoot the messenger. I'm just a messenger. Shoot the messenger. Okay, so this is an L-shaped statement. You go across with expenses first, and then you go down, okay? So we're going to walk through this. I'm going to show you a piece at a time so I can blow it up big enough on the screen, and then I'm going to kind of show you the whole formula. So across, we have to list expenses first, and then we have to break it out and show our governmental activities always government-wide. We have to separate our governmental from our business type activities. Why? That profit motive. How you coming on that profit motive? They're looking for that. Okay? And then you usually, so you list expenses first, really? And then you list your program revenues. So let's take our museum. Remember our museum where we said the full cost might be $100, but we only charge $20 for you to come into our museum? So the $20 admissions is going to be program revenue. But, and then I'm going to have my expenses, and so I'm going to have a huge deficit, right? I am. And, you know, just don't be like me and don't get your little Diane feelings hurt, because this is the way government is. Why? We don't have a profit motive. We serve, right? We provide a service. We provide a service, so you don't get your little Diane feelings hurt. You're going to be okay. We're going to work through this. So we have this huge deficit, and then we start going down. And what do we do when we go down? We add in those general revenues, okay? We add in those taxes that we get, those grants that we get. So why? This statement shows the degree to which taxes and grants and all that funds our government operations, which would be, dude, wake up, the vast majority. It's what governments do. It's what governments do. It's the nature of what we do. So no hurt feelings. All right, let's go to Terrebonne Parish. So we are at the top where we're going across, okay? So we see here, we see the primary government, and then we see the component units at the bottom. They got component units, okay? You may have them too. And they list out the purpose of their component units, that they have public safety, health and welfare kind of thing, right, for that. And then within primary government, there you see their governmental activities and their business type activities. They've got it separated out. So that's our rows to get there. Now, let's go with our columns. God bless us, right? Expenses first. Notice that they don't have parentheses around them because that's not what you do with expenses. Parentheses in accounting means opposite of normal balance. So expenses have debit balances, so you would see parentheses would imply a credit balance there. So you're going to see your expenses first. And then your program revenue gets divided into three kinds of categories. Okay, charges for services, where do we see that? Take a look at those business type activities, because what's going on in there in the middle? They have utilities, okay? Like many of us, they have utilities going on. So that's where they have those charges for services. Those other kinds of things that they have, not so much. That 124, look, I'm not sure, under culture and recreation, that may be their civic center, okay? So their charges for services, their governmental activity, not very little. But business type, yeah. See the reason of why you separate out business type from your governmental? Because business type, you have that profit motive to do that. And then you have operating grants and capital grants and contributions. So these are grants that you get to provide those services for those things. Very few grants under business type activities, right? Very few, but you do have a lot of those for your governmental activities. All right, so that's basically going across with a little bit of going down. You got it? Good? We're good. All right, Diane, Then we're going to, so here still across the top, oh yeah, I couldn't show all the columns on one thing. So program revenue, so still going across. After we get our program revenue, then we have our net. You see we have our net expense. So here we have expenses and then our revenue, and then here are our net columns. Okay, this is where we're talking huge deficit. And there again, we've got it divided between governmental and business type activities. Okay, to be the total, and then our little component unit friends at the bottom. Okay, you got that? So we're still going across at the top. So we have expenses, we have revenues in our three columns, and then we have the net. And right here in Terrebonne Parish, for their primary government, as fully expected, they have, what did I say, a huge deficit of $121 million. No hurt feelings. No hurt feelings. Doesn't mean we're bad financial managers. It's the nature of government. So now let's take a look at the rest of the story. And now we're going to go down. And we're going to do, this is the whole purpose of government. Why? We add in those revenues. Okay, we add in those taxes. So the kind of the way it works is Diane drives on the streets of Baton Rouge and Ascension, and here we are in Lafayette and Calcasieu Parish and all these places. But Diane don't pay to drive on the streets. The tax revenues are general revenues that pay to upkeep those streets, right? It's just the nature of government. It's what we do. So let's add those things back in. And here we go again. So now we're starting, we've gone across the top, we got our net, and now we're going down. And so here we are on our adding back in to that huge deficit, our general revenues. And this is where we add our taxes, our primary revenues in governments, right, for those things. And then we have our grants and contributions that are unrestricted for that, and some other miscellaneous things. Here again, across the top, we have our governmental and our business type activities. We're going to keep that straight. What do you expect to see here? Maybe not so much under business type activities, right? It looks very different, and that's definitely true for them. Their governmental activities, $95 million. That's very common in governments. No hurt feelings. No hurt feelings is what governments do. Business type activities, they do have some property taxes in there for those business type activities. I could see that in like a civic center, right, or something like that. And then you have the total, and then there's your separate column again for your component units, whatever your component units are. So now we go to that change in net position. So for Terrebonne, that was hard hit by Hurricane Ida, their change in net position for their governmental activities was a deficit of 7.4, not surprising. Business type activities, 4.4, not surprising. Tough times, very tough times for them, you know, to get to that debt. Then their component units did okay, but they still have very strong net position. All right, so we went across and then we went down, and when we do the down, we are happy when we get to add in our general revenues. That's the way government is funded, and it explains to the reader the degree to which they separate this out because it explains to the reader, it explains to the reader why the degree to which it's funded and how their for-profit is doing, okay? Y'all got it? All right. So see, our statement of activities is not that hard, and it gives us really, really good information. Okay. So here's kind of, because I couldn't show you all on one slide, I used those numbers so you could see going across. So you can see for the primary government divided into governmental, business, total, and then component units. So we list the expenses first, then we add in those program revenues, those three, and then we get the net going across. And we're separating the three out, the governmental from business type from component, and that total is our primary government, and then we go down with those general revenues to lump it all together to come up with that number. So that's how you read that. You read that totally across, and then you read down. Should you want to skip the totally across, just read the down. That's when it all comes together for that. So that's kind of how we read that, okay? So to fit it all on one page. The I don't know why GASB had us do this. When you think of other income statements, you know, we do revenues before expenses to get to our net, but this is what they wanted to show us, again, for that degree that it's funded by those general revenues, which is going to be a lot. All right, now, in your financial statements, in your audit report, you're also required to do there are required to be 2 reconciliations, basically. So you reconcile, you do the balance sheet reconciliation between net position in full accrual and fund balance, okay? So that's going to largely be your governmental funds, right? And that's basically what you're doing. You're converting from, you're reconciling the difference between accrual and modified accrual. So you do it on the balance sheet for your net position / fund balance. Then you do it on the income statement for your earnings. Okay, your change in fund balance, your net income essentially. So these are 2 reconciliations. You will see these. They will say things like depreciation, you're going to add back in because it is not recorded in fund balance, but it is recorded government-wide. So you'll see those kinds of things in that. Now, the first time I did this reconciliation, it took me maybe 3 weeks. It's very, very hard. The auditors make it look easy, but it's not that easy. But once you do it and you learn your numbers, look, the first thing you do in your Excel spreadsheet is save your formulas. Write lots of really good notes and really good cell comments and change your formulas, because after that it's not so hard. But it's really hard to grasp the concept. And when you can do this, like you have arrived, when you can do these reconciliations, both of these reconciliations, because now you can do like backflips between full accrual and modified accrual. Okay, so to be commended, and that just describes those 2, because you know accountants like reconciliations. One of the basic financial statements. Before we go on to our wonderful annual comprehensive financial report, y'all have any questions? You are not getting tired, huh? Okay. ACFR. What, we end at 12 or 12:30? 12:30. Budgetary goes really quickly. Okay, contents of the audit report, like we might not take a break because we're so close at this point. Let's go through an audit report. What's in an audit report? I want you to appreciate your audit report. I really do. I want you to take ownership of it. I want you to go look at those numbers, know where they came from. When you get really, really good, you're going to want to do them yourself, right? You're going to want to create your own spreadsheets, and you're going to want to calculate your major funds and then your non-major funds, and you're going to figure it out and what you want to call them. And you may even be like me and want to format it and get it just right with whatever font you want to use and things like that. So in your audit report, just your plain audit report now, we're not talking about an ACFR. In your audit report, starts with the auditor's opinion. What we all strive for is presents fairly in all material respects. That's what we call a clean opinion, an unmodified opinion, okay? And that most of us get that. Most of us do get that opinion. And then you have RSI, required supplementary information, required by the GASB. You have Part 1, which is called Management's Discussion and Analysis. There again, remember I told you in Part 1 that GASB and FASB are sisters and their mama is the Financial Accounting Foundation? Well, the for-profit world under FASB has been doing MD&As for a very, very, very long time. So finally that came over to the government-wide in the year 1999 with GASB Statement 34 when it came out, and now we have to do an MD&A as well. We're going to go through that a little bit for that. And then we have our basic financial statements for our 3 fund types, right? We have our government-wide that we just went over. We have our fund financial statements by those major fund types, governmental, proprietary, fiduciary. And then we have our wonderful notes to the financial statements. And then we have RSI Part 2. So Part 1 is the MD&A, broken up by the basic financial statements and notes, and then we go into Part 2, and we have these kinds of schedules that we have, and these are required by GASB. Required means required by GASB, okay? And then there is supplementary information SI, also called other supplementary information. This is required by other people in Louisiana, like we talked about our legislature. It requires us to do an agency head compensation schedule that's back in here. Those of you in the justice system world have to do Act 87 justice system funding schedules. Those are back in here. Those of you in sales tax collector world, for the first time in your 2023 financial statements, you're going to have some schedules that are back in there. They're required by legal authorities and others, but not required by GASB. So they're called supplementary. When your auditor issues an opinion, the RSI he looks at and he doesn't express an opinion on RSI. He does no procedures on that. So he tells you that. Like, dude, I didn't do any work on this to speak of. Okay? I don't want to offend my auditors in the world because they do limited procedures. On the SI, they do express an opinion on that in relation to the basic financial statements. And they do work on that part of it. Okay, so, and then we have these other reports that we have. These are reports, remember all of those authorities that we had, the federal government and things like that? So we have all of those, and this is in the back of our audit reports. This is where our schedule of findings are, and the prior year findings. You have to have your corrective action plan. That's a whole nother topic. You know, Barry talked a lot about the importance of corrective action plans yesterday, and then applying those statewide agreed upon procedures. So the auditor's report, the one that we want to get, there are 3 kinds of opinions, or there's actually 4. We have present fairly in all material respects. Then we have qualified, which means yeah, but, and it may be like component units or a particular fund or something like that. Then there's adverse, you don't want to get, does not present fairly, like, dude, these are wrong. These are not good numbers. And then disclaimed is, it's such a mess, I can't really tell you. I can't really tell you. When they have those, they have a paragraph on the basis for those opinions. So we talked about management has to create those financial statements, and the auditor's responsibility is to audit them, and he obtains reasonable assurance. He can't obtain absolute assurance. The day could possibly be coming, because with artificial intelligence, they can really look at 100% of our transactions. Right now, they sample based on a risk assessment. But with AI, they could be looking at 100% of your transactions, you know, and you're like, oh, Lord, I got like 15 things wrong, you know, but sure, my general fund might be $300 million. So yeah, stuff does tend to slip through the cracks sometimes. So that's their responsibility for those, okay? So they will talk about an emphasis of a matter. That's something that's already reported that we say, hey, reader, want you to pay attention to this for that. And then we talked about those other things. All right, so here we go for Vernon Parish. So this is not uncommon and not a bad thing, okay? So there's an adverse opinion because of those discretely presented component units, because we're required to have them in, but when I don't have the information, then I'm getting, in our opinion, because those are left out, it's adverse. It doesn't fairly state. This is not uncommon with discretely presented component units. That's why. What's Diane's favorite kind of component unit? Blended, because I have all of the stuff. I'm not waiting on others to do those. But if Vernon Parish wants to issue their report on time, this is what they have to do. You know, so it happens. But then they got their unmodified opinion on everything else. Okay, so that's an auditor opinion there. MD&A, there are 8 and only 8, no more, things that you can talk about. You are required to talk about. This is GASB. This is required supplementary, required by GASB. So what is this? Facts and known circumstances, no subjectivity. No subjectivity, okay, for these things. So all of those things that we have to have, that you have to compare this year to last year. But you don't just say capital assets increased by 10%, because anybody can figure that out. You have to say why. Now, I know y'all are looking at me saying, Diane, it's because we bought more capital assets. That's really why they went up, and we know that. What capital assets did we buy? What's going on? So maybe we had some of that construction in progress, right, that moved over to buildings. Maybe we had, we used our American Rescue Plan Act money and bought some capital assets. Why? Not just what or how much, but why, the real reason. I can tell you it can be agonizing. Figure it out. You will be so thankful, because when you go back and read old reports, you're telling your government's story. Why in that 1 year did capital assets grow that much and it didn't grow in any other years? Think of our friends out west who got hit so hard by Hurricane Laura and Delta. They had to write off a bunch of damaged assets, and then they're building new ones. You see, it tells a story over time. It tells a story. So that's why you want to have that in there, because, you know, I love stories. And then you have to furnish that information and only currently known facts. Leave out your opinions, leave out your hopes and dreams. We're going to get to where there's a place for that. Basic financial statements, look, that's our last two things. We've kind of gone over these, right? We've got those two government-wide statements, and then we have our fund financial statements for all of our fund types, and then we have all the note disclosures. So the note disclosures, GASB's working on a project right now. They should be information that is essential. How do you define essential? I'm not on the GASB board, so I don't know. But it has been a topic of discussion for over a year on what is essential, because what's essential to Diane Allison may be very, very different from what's essential to Lee, because he may be coming at it from a different angle that's not me. There are a lot of different users to our financial statements, so it's a harder discussion than what you have to have. They contain basically three types of information. We talked about that description of policies in SSAP 1. Note 1 usually, and then we have those additional or detailed information that we can't see on the face of the financial, and then things that don't meet the criteria for recognition, so further explanations where you might talk about like your lease agreements and things like that. Limited to what essential, and there again, you exclude subjective information. They apply only to material things. That's an important thing to remember in your audit report. Immaterial things don't count. So you don't have negative disclosures, like we have no component units, that's why there's no column. That's a negative disclosure. You don't have to say that. Users of financial statements are considered to be somewhat sophisticated, so if they don't see a component unit column, then they know you don't have component units. It's okay, I can live. So City of Baton Rouge, here again, I'm bringing them up. Why? Because what I like about them is they put the note next to the element on their basic financial statements. So you can go back and find it. Notes, Diane's pet peeve, notes to the financial statements need to be in financial statement order. So after note 1, right, then you start with cash and you work your way down through the balance sheet, okay? So it will mess me up if I see a note on a liability like bonds payable, and then that's note number 4, and then note number 7 is on investments. That messes with my little Diane mind. Why? Because investments comes first on the balance sheet before that. So I remember one place where I worked, it's like, no, this is giving me a headache. We're going to renumber our notes, and we're going to get them in the right order, in the balance sheet order. So, and for the most part, look, you can go through and see. There are some notes that are like neither of the above, so you kind of squeeze those babies in when when you figure it out. But for the most part, that's kind of how it goes for them. So I like that presentation. So here is a index of all the kinds of notes for our friends at Vernon Parish School Board that you have. So you can see all the kinds of things that get disclosed, okay? This is all governed by GASB. However, if you're like me and you want to add something then to your note that's not required by GASB, but you think it adds information, then you can do so. So Diane, you know how I was country when country wasn't cool? For the people my age in the audience, the rest of you let's go with it. Just go with it, okay? So what happened was GASB 88 came out on conduit debt. And GASB 88 requires us to disclose our short-term borrowings. So what are our short-term borrowings? They're like when we do cash flow borrowing. So like if my fiscal year starts in June, I don't get my or July, I don't get my property tax money until January. But dude, I got bills to pay between then. So I'm going to go to the bond commission. I'm going to ask them if I can do revenue anticipation notes. They say, yep, you can. I do my revenue anticipation notes. I issue my debt, I got money in my bank in July or August, I can pay all my bills, and then when my ad valorem money comes in January, I pay back my revenue anticipation note. So on my balance sheet on June 30th, I have no debt. But dude, I didn't like that. I said, you know what? I want to disclose that I did short-term borrowings. Why? Because it speaks to financial management. And my goal in life was stop that. How did we get in this pickle and stop that? It's not good, right? It's not good to do that. Cost taxpayers money. So I would disclose those. And then when 88 came out, you're required to disclose it. So that's an example of what I want to put in my note that wasn't required by GASB, but I thought it added information. Now, your auditor expresses an opinion on the notes. So when you do stuff like that, and you like your auditor, and you want to be good friends with your auditor, right? But not too good friends, because otherwise you impair independence. So your auditor's like, Diane, really? You're like, yeah, it's all good, and let me give you the stuff. Here's the stuff, so that they can audit that, because now they have to do extra work on Diane's little statement she wanted to put in, okay? So that's how the notes go, all kind of little things, everything you wanted to learn about all of that. So what I wanted to show you was capital assets, because things like capital assets are in two places, okay? And there's a reason for that. Note 1, SSAP, Summary Significant Accounting Policies, okay? Here we go. This is where they talk about it, because my capital asset policy is different from Renee's capital asset policy, okay? So here, for Vernon Parish School Board, here, look, there's their capitalization threshold, their donated capital assets recorded at acquisition value. That's very good, because that's according to GAAP. Anything else would be a GAAP departure. And then you go look at, here's their useful lives for their categories. Okay, so you see how this is an accounting policy. You see how this is going to be different. Your government may do this differently. You may have a different capitalization threshold. I don't know what it is for the state, but I bet it's not $5,000, but you need to know what it is, right? You know, and they have their $100,000 for their intangibles for their software. You know, so we have different things. The user wants to know this is essential. So that's what's there. But, so this is in the SSAP, okay? And it has, generally they go just like this, where they have letters for each of the topics that they discuss. And of course, what's the way to do it? The order that they appear in the financial statements, for the most part, but harder to do in the SSAP. So here is their whole capital asset note disclosure. Note number 6 on capital assets. So here's where you can see they break it out by type of asset, those being depreciated, not being depreciated, that you can see beginning, addition, deletion, ending balance, and you can see at the end, they only have governmental activities, they don't have business type activities, they've got $65 million, that's the number on the front of their financial statement. So this gives a whole lot of detail. He's got his GASB 87 note here. What else that's, excuse me, not shown here is where that depreciation expense that totals, let's see, being depreciated. Okay, you see my additions of right here, total accumulated depreciation of this 3.1 million. Okay, my poor people online. It's the $3.1 million right there. That at the bottom of this note, which I didn't copy, is all the functions that gets recorded to. Lots of good information on your capital assets, the makeup of your capital assets. So you see, notes have really, really, really good information that you can use. When you're managing your balance sheet, I'm looking at this. I'm looking at which assets am I going to be getting rid of. We don't get rid of very many in our governments, you know. Will I have some that I'm going to be demolishing and things like that? In construction in progress, they don't have any deletions yet, but sometimes you'll see a deletion there and you'll add it to your buildings when that construction is finished. So lots of good information in your notes. Any questions? All right, Arthur. Look, Liz, he's got a question.
Yes, good morning. Ville Housing Authority have an annual audit report. Okay, they have created a nonprofit to do tax credits, and I've been on the board for about 3 months. But with the nonprofit organization, are they required to have an annual audit report like this?
It depends. It depends on a lot of things. If it is a blended component unit, which I wouldn't be surprised if it is, then no, they won't have their separate audit report.
But should they have one annually or like monthly?
They would be
Like
when
monthly, we get a monthly financial report.
theirs would be their blended component unit will be in with the primary governments, in with the housing authorities, right? Because think about it this way: it's just a fund.
Right.
It's a fund. But if it's discreetly presented, yes, it's going to go through its own audit.
Okay.
So you have to know what kind of component unit it is.
Okay.
Now, I wish I could help you, but I can't help you because you have to look at all the organizing documents. Good question. Any other questions? All right. Where are we eating for lunch? Let's keep going. Okay. So now let's go through our RSI and our SI, and we're going to go through this really fast, especially the RSI. Let me explain the asterisks, budgetary comparison schedules. This is another place where GAAP gives us two choices. Choice number one, we can list it as a basic financial statement in the front. So, you know, we have for our fund financial statements, we have our fund financial balance sheet, and then we have our statement of revenues, expenditures, and changes in fund balances. Up in the front, we can also have our budgetary comparison schedules, okay? Or we can put it in the back. The difference is the amount of work your auditor does. More work when it's in the front than in the back. What does it mean to you and I when your auditor does more work? That's a bigger audit bill, okay? So for some, very few, you will see it in the front, okay? And he does as much work on that budgetary comparison schedule as he does on your balance sheet. But for a lot of us, we put it back here. And it's in relation, it's when it's in RSI, limited procedures. Limited procedures. So a whole lot less. Okay, so what is your auditor doing when he's doing limited procedures on your budgetary schedule? He's like, Diane, let me see your notice of your hearing. Let me see the notice published in the paper. Let me see all of that good stuff, the budget that they adopt done. But to my auditor friends, I know you do more than that, but in the interest of time, that's what we're going to say. It's a lot less. So it depends. It will cost you more money to put it up front. In other states, they actually can be required by law to put it up front. Not so in Louisiana. That's why that asterisk is there. So those required schedule, pension and OPEB, there again, that's advanced governmental they have there. They are required to have 10 years worth of stuff. We don't. The standard hadn't been around for 10 years. So there's a little caveat says standard hadn't been around for 10 years. We're going to add it when we get it. And then there's OSI that we talked about. All right. Oh, look, there you go. So there's the information on the budgetary comparison schedule. So GAAP does require it, not for all your funds. You know, in Louisiana law, we have to adopt a budget for our general fund and all of our special revenue funds, right? But in, and Lawson Act with capital outlay funds. But in GAAP, they only require you to have your budgetary comparison for your major stuff. They can't have all those financial statements in here. Like, that'll drive people nuts. Too much information. But for an ACFR, yes, you do that. So here is Lincoln Parish, their budgetary, and this is original final. They did change. You don't have to have, they may have amended 5 times. You don't have to have every version. You just have to have original, final, and then your actual. And then you have that variance with positive or negative amounts. So that's basically not that hard, not that difficult. Where it gets to be difficult is when you have another schedule because you budget maybe on a cash basis. But you have to, for budgetary purposes, you have to convert to GAAP, and then you compare with your actual results. Too much work. What do we say? Keep it simple. So you may want to consider, that's why I said I'm budgeting on GAAP basis and we're just going with it. And then there are these schedules. I wish I could tell you what these are, but I can't, because it depends on what kind of pension you have and what kind of OPEB you have. So basically there are different schedules for those. So here's one for Plaquemine Parish School Board for their OPEB liability that you can see. And then here's one for, okay, the other thing that we have is our non-major. So remember our non-major, and we saw that they were all lumped together, non-major. And so here we go for Caddo Parish Commission. This is also in the back now, right? We have all our special revenue and their capital projects. So I broke that out to show you that there you go. On in the back, now here is where they have 3 capital projects funds that tie. So this is the transparency of showing you all of the funds. The agency head compensation schedule, this has been required, I forget how long, that we have to put this in. So, and there's the statute, and those are the things that you're required to put in there, and that's required by law. So where is this? This is in supplementary information, not required by GASB. That would be under RSI. This is just in SI to have this report. For that, justice system funding schedules. Here's the sheriff of Livingston Parish that has to report these. And these are very technical, 2 6-month periods for that. But there again, that's in the SI section. Here is, it's not filled in yet. We're going to start seeing these for fiscal years effective December 31, ending December 31, 2023. And this is a new law that's required where they have to do uniform tax reporting on that, basically to break out the cost of sales tax collections to see if there are, to see what those costs of collections are, and that's a whole nother discussion. Any questions? Because we're just going to keep going. We're on the marathon. You have a question? No? All right.
Wait, so on this schedule, on the schedule of sales tax collections, Natchitoches Parish has a tax commission that collects all our sales tax. Is that going to be part of their audit or part of my audit?
It will be part of their audit, whoever the sales tax collector is. Okay, throw that note away.
Yes.
Yep. Y'all know Barry from yesterday. Barry is our ace on this. So, and you know, all of our information is on the website, our contact information. So if it's not in the slides and you want to call Barry, just go look on our website, and under local government services, we all have a section. And then you can go see Judy, who's helping us, Liz, everybody's phone number's there when you have questions, and their email. So you can contact Barry and he will help you with that. Yeah, brand new for that. Okay, let's talk about the ACFR. So what the ACFR is, in Diane's words, is the audit report on steroids. So what we just went over is a standard audit report. And there's the audit report on steroids. And what is the audit report on steroids? It's that kind of stuff with a whole lot of additional information. This is the pinnacle of accounting, financial, and reporting. The Government Finance Officers Association has a program where if you do it well, and all of the ones that I have showed you earn the award, Certificate of Achievement for Excellence in Financial Reporting, okay? Even the town of White Castle. I'm so proud of the town of White Castle because I feel like even for the smallest of governments, just because you're little bitty, you can act big and you can do this. And it is great financial information. I love my book. I looked at my audit reports multiple times in a day. They sat on my desk and I looked at them because the information is so absolutely phenomenal. So in the front, we have the letter of transmittal organizational chart, and then in the back, that's in the front, then we have all that audit stuff we went over, and then in the back, we have the statistical tables. Depending on what you have going on, you may have 20, 22, 25 statistical tables, a whole lot, and depending on how you put them in the columns also. So here's the kind of information that's in an ACFR that is not in an audit report for that. That those statistical tables provide that context. So this is what that means. Somebody has the nerve to say, you know, this government has operated at a deficit in the general fund the last 7 years. I'm tired of it. They need to turn things around. Well, guess what you do? You go to your statistical table that shows that, and you say, not true. Not true. Go look. Here are the facts right here from the audited financial statements, because I forever had to do that. You know, how come we keep losing sales tax revenue? We don't. Go back and look. We're making that. What's happening to our population? I could go on and on and on because these are phenomenal tables, phenomenal information. What it is the truth. What it is facts for that, okay, to do that. And also, people are looking for management's insights. That's in the letter of transmittal. This is where you get to do your hopes and your dreams. So congratulations. I think there are 59 governments in Louisiana. Anybody here earn the ACFR award? Okay, those of you online, raise your hand if you get the ACFR award. Okay, proud of you. Very, very proud of you. It's a lot of work. It is a lot of work, but it is so worth it. And especially when you have debt outstanding, your investors love the fact that you do that. And I could do a whole presentation just on the value of doing the NACFR, but we don't have time. So here are our 59 kind of governments and the way that it's carved up. Mostly school boards that we can see, but we have some others. Our state of Louisiana is one. Do you know there are only 40 states that do an ACFR? Like, dude, where are the other 12? Sleeping? You know, but aren't you glad we're in that number, that we get that? So very proud of our state for doing that. And also look at the governments and how many years they've been getting it. The vast majority, well over 25 years. I mean, that's pretty phenomenal. You know, when you think about that, that's not the one in person that's making that happen. That's like one person started it and then it keeps going. And what is that? That's a culture in your organization. That's a culture of transparency. It's just so cool. Kudos to City Parish of Baton Rouge because they have been getting it the longest. So here's the thing. When you have questions about financial reporting, okay, the ones that I've shown you, go ask them. Go ask them. Go find out. On GFOA's website, you can find out who these award winners are. So you're a sheriff, you're an assessor, you're a, you know, whatever that you are. There's a housing authority that gets the award. City of Monroe, they get the award. So you can now go look, right, and find out what they do. And then when you grow up, you want to be just like them and just that good. So a good thing to strive for. Very, very proud of our Louisiana governments for that. So in the introductory section, this is what we have. There are basically 3 sections: introductory, financial, statistical in an ACFR. And so you'll see things like an org chart. You'll see things like your list of principal officials. This is an opportunity to show their little smiling faces. You know, instead of just listing Diane, Allison, you know, Ward 1 or whatever, you can show a smiling face of your governing body. Make it personal. This is your story. This is your story. Pretty cool through time for that. So in the letter of transmittal, this is where you formally transmit it. You talk about that profile of that government and the things that you have. Here you mentioned legal level of budgetary control. We're going to get to in the next part. And here's what they want to know. Information that's useful. This is management's insight that your constituents want to know. How are you doing on long-term financial planning? What's going on? What is your tax abatement policy? It's GASB 77. We now have to disclose that. What's going on with that? Do you hope to get a return for that kind of thing? And then, so here's one that I thought was so cool and was written in such a easily understandable style. So Calcasieu Parish School Board, hard hit by Laura and Delta, big presence in the oil field. So what's important to them when they're talking about it? Price of oil. Look what they do. We are projecting oil prices will average 98 this year, 78 in 2023 and 82 in 20. Is that not cool? Right here, people want to know this kind of thing. And the way that it flows, I thought this one was a great example to show. And then they have a chart that they use for their basis, and then they cite the source of that. Charts add a lot of good color to that. Here's our housing authority for the city of Monroe. Here's an example of the value of a org chart. So they're talking about how this particular housing authority is organized. What departments do they have? What kind of jobs do they have, and the people that work in those departments for those things, because we call them different names. And so yours may be different than this, and you're like, I want to be like them. That's pretty cool. I think this is really, really cool to get this additional information. So we kind of talked about all of the financial section. So let's take a look at statistical information. So like I say, this can be well over 20 tables. You're going to go through, then these you get straight from your audit report for these 4, and then you do this ratio. So these are 4 schedules right here. There again, your government-wide and your fund financial statements. So here's one for an example for Lafourche Parish, what they have, and there again, it's broken out, governmental, business type, primary government, you know, and you can see the trend through the years that they have. Now, they would have 10 years, but I cut it off so we could see that. And then there's revenue capacity. So they want to know what's going on with your property taxes, what's going on with your sales taxes. Let's talk about that revenue base that it's based on and the rates and those kinds of things. Who are your principal payers? So here's one from Jefferson Parish Sheriff's Office, because this one, a lot of us will have this chart. And what this one is our value of our property in our parish and how it has changed through the years going down, right? So we can determine, because why? We charge property taxes on this property. If it's going down, I'm expecting to see less revenue, right, in my ad valorem. If it's going up, maybe not. You list the source, and then you also have to explain some of your major variances. So that's what the notes are. This one's nice because he has a chart. So we could sit here and go crazy reading numbers, or we could look at the chart and say since 2012 it's really gone up. You know, pretty cool. Is this not just the coolest thing? So see how you can dispel myths with facts, information. So this one I love. This one shows your principal property tax payers. So this one is not for 10 years. This one is current year and 9 years prior. Why? Because it doesn't change so much year to year, but over 10 years, it does change. So take a look at that. In the current year, you see our top 10, but look at in fiscal year 2013. We have some that aren't even listed, weren't even in our top 10 now, but they were 2013. What happened to those? What's going on? And when you can look and see what's happening, you can tell what's going on in a parish. It may be changing its economic base, right? Its economic drivers. Way too cool. This is just the best stuff. And where do you get this stuff? A lot of times from your reports that you do, your official statements when you issue bonds. Wealth of information on who those are. Information on your debt capacity for those who issue debt. So these are ratios. We want to know, do you have too much debt issued? Can you afford to pay back all of your debt? So right here, our friends at Lafayette Parish School System. This was a great example of direct and overlapping debt. So how much, this answers the question, I live in Lafayette Parish. How much debt am I paying? Am I overtaxed compared to my friends in St. Martin Parish or St. Landry Parish or another nearby parish, right? So here you go. So you can see the school board has that much debt outstanding, and here's the overlapping, and then the underlying debt for that. So you can see how heavily taxed. If I'm in the city of Broussard, I owe a lot of money, right? I owe some to the city of Broussard. I may have some overlapping debt for my taxpayers in some of those other areas, like the sheriff, right? And then I also have to pay the school board. So very, very good information when you say, you know, because you hear about these in communities, like you hear that New York is heavily taxed. California is heavily taxed. Go pull out the statistical table. You could see where it's happening. And then the last section is our demographic and economic information. So this says a lot about what's going on in our parishes. And this is where we are each so unique. And I love it. I just love it. So what's going on here for St. Tammany Parish? What's going on here? Look at their population. In 2013, they had 239,000. They're up to 269,000 in 2022. Growing parish. Looks like it's increased every year. Has it ever gone down? No. It keeps increasing every year. So what does that tell you? If you live in St. Tammany Parish, there are more people waiting at the red light. They need to build more roads, right? But in addition to that, what it tells you is, what does it mean when more people come? You may get more sales tax. You may get more ad valorem tax, okay? Healthy sign there. And then it has that per capita income and the public school enrollment, because this is their public schools, and the unemployment rate. So some of these columns are required. And then the population, total PI, and the per capita personal income, unemployment. Those are all required, and they added in their public school enrollment to give you a context for everything. So Pretty cool demographic information. And then you have some operating information. So for some of us, that's our number of employees, bunch of happy employees like we are on a Thursday afternoon. And then we have how many miles of roads have we paid? And what about the condition of our capital assets? So here's one for St. Bernard Parish government where you can see this is their operating indicators. So public safety, when we look at for their fire, the number of rolls, the number of fires that they have through the years. Great information. Great, great, great information. This is your community. This is a snapshot of your community and what's been going on over 10 years. You see how this is just phenomenal. So any questions on that?
I have one for you. Going back to the reconciliation of the government-wide financial statements to the fund financial statements, what are your tips or line of thinking when you're preparing those reconciliations?
The first thing is you definitely have to understand what they are, and it's basically converting. Once you understand what they are, and you know that you're converting from modified accrual to accrual. So this is what you all know. You all know this because you've been here since 8:30 in the morning. You know that full accrual has those capital assets and those long-term liabilities. Modified accrual does not. So what does that mean? Modified accrual I just expensed when I bought a building. Full accrual I capitalized and added depreciation. Those are reconciling items. Okay? The bond, I issued debt, I got bond proceeds. I know that on modified accrual I recorded revenue, it's a happy day, right? But on full accrual, I do not. When I convert to government-wide, that's a liability. So that's a number that you have to do. So those numbers and the related numbers that go with them. So bonds may have a premium that you have to amortize. So that's going to be something like that. So you have to, when you know the nature of those and the details and your particular situation, then you're going to know.